Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, as we're going to do what we do each and every day, identifying potential breakouts and reversal trades in our equities, futures markets, as well as our commodities and currency futures. If you're new to the channel, one of the things that we do here that's kind of unique is we leave the lines on the charts so that you can see what we do every day. How do we adjust trades? How do we move them? How do we stop them? How do we change them? And how do we cancel them when they don't meet the right entry criteria? Let's go ahead and dive in. S&P this morning, we're down about 1 point. A little bit of a pullback in the overnight hours as we are continuing our march higher. We talked yesterday about areas where we could see a bit of a potential reversal. I thought we might actually get a little bit of weakness in the equity markets yesterday, but to no avail. Very little weakness. We didn't sell off until after the 5 p.m. hour Central Time. So the markets did get a little bit of a sell-off, but not enough for me to worry anything about. If I'm looking to get long, I still have a couple of areas down in here in order to lean on. Looking at this hourly chart, I don't have any super quality demand for me to jump all over. And that's really the hardest thing to do right now, is to find quality demand to jump over. Momentum is slowing a little bit over here, but not enough for me to even consider looking at a short. So I would say that as long as we continue our march higher, if we get some sort of a basing here, you can always take a breakout above the all-time high, provided that there's a little bit of basing. There's going to be a few points to be had on a breakout above the all-time high, provided that we get some basing in front of that all-time high. The Nasdaq, that's exactly what we had happen yesterday, as we got a little bit of a basing above or right at that all-time high, popped up, gave us a little bit of a run. Did have a little short in play for about a 15-minute if somebody wanted to give it a try and were more aggressive. We talked about in our live trade room on Sunday night. This is only if you're a more aggressive style of trader. And so it was this little 15-minute supply area. Now, I left it on the chart because price did come into this little 15-minute supply area, which is really just consists of these upper wicks. And it's a confirmation entry, meaning as soon as price touches halfway in, you get short as it comes out of the level. So you may or may not have gotten in on this. Oops, let me go to a 15-minute to kind of really zoom in on that. You may or may not have gotten in on this on this red candle right here, as it just got you in, and then immediately a very quick stop out. But the good news is on this kind of a piece, this was its own pivot, so your stop is fairly close. You've got a very small amount of risk, and then when it did eventually pop, you got a really nice run. So now this is an example of an old supply area, however, acting as a demand zone. Notice we hit down here in the Globex session and got a really nice bounce off of this level. Remember that price has memory, and that's what we see here, is that price had memory in that area. This is what I look for when I talk about fair price value areas and fair price zones and where the market tends to trade back into those levels. So I'm going to remove that level for now, as we have already kind of given this one a touch off of that reversal, but it was a really nice little pop-up that we had in the overnights. And so same rule apply in the Nasdaq as it does in the other markets, in that we are, if you get some basing below the all-time high, you can get a little bit of a pop out of that region. Yesterday's morning move up, which was from down here that started this kind of catalyst, does still give you an opportunity on a reversal if we come back into this region. So I'm also going to put a little bit of an area along here, although I would be cautious of seeing basing happening in front of this level. So be aware of any basing that might occur in front of that zone, which would negate that position. Crude oil. So crude oil, we did break down below our little level in here. We got a little bit of a run, but not a whole lot. So if you took that crude oil breakdown you had a little bit of a run as it broke from 58.61 down to 57.72. So nearly a full dollar's worth of movement on the breakdown. We've now come back up into the origin of that area. So leave me a comment down below if you're able to catch that crude oil breakdown. If you didn't catch that crude oil breakdown, we are coming back into where we could see a bit of a reversal right up in here. A little bit of a reversal potential is in this area, although I don't know that it'll make it up there. I think that the next more logical move is for price to continue to come back down, and we may even get a candle-to-candle opportunity somewhere up in here. And then in gold, yesterday we talked about this little supply level, and so that supply level price came into that supply level right after the daily market commentary, hit that zone, moved away for both target 1 and target 2, and it is continuing to run inside of this move. So if you were able to catch that one, leave me a comment down below. Let me know. Remember, this blue line was designed to be this was where our downtrend would have been official. Right, as we switch to our 4-hour chart, I now have a lower swing low and a lower swing high that I can now really just lean on a bit more. And so on the 1 hour, after our reversal trade worked out pretty well, now we're looking at another potential reversal trade as price could make it back down from here. So let's look for price to come down out of this level. If you wanted to do this on a candle-to-candle formation, I think it's okay, but I still think that there's a possibility that we'll make it all the way down to this 1532. Now, if we do make it to that 1532, it's not a great demand level any longer on the 1 hour if our 4 hour is trending down. So just be aware that this becomes lower probability. You got to go confirmation entry on something like that. Bonds and currency markets, not a whole lot to discuss here in terms of bonds and currency markets. The ZN still staying below our level of supply, which is a confirmation entry, but fairly sideways market. The Aussie, we did touch our 15-minute level last night, as that's the level that we had identified yesterday as a potential reversal point, which was that little hidden one right there at the open. So price came into this level. We got a nice little move away. If you did take that one, move your stop up, lock in some profits. At the very least, move it to break even. There's no reason to take a loss on something that has already started to make that movement. And then, so let me take this one off. And then the euro, we are still between those levels of demand and supply that we talked about. Now, it was tempting yesterday. To take a look as we were, kind of chopping sideways in here to kind of take a look at this supply area for a short. Well, notice we popped just above it because it was a fairly weak area. And now we're still above any quality demand. I don't have any reason to add any new levels to this, although on a 15-minute chart, I do kind of like this price action that we've put in, but it's very, I'll call it thorny. With all these wicks up here, right? I always describe these wicks as kind of reaching into a bushel of thorns, and if there's too many wicks, then there's a good chance you're going to get bloodied. Next, the Canadian dollar. So the Canadian dollar, we talked about a little potential breakdown, and so we actually did get a little breakdown from here. So, but we didn't get 3 touches on this piece. Although I still think that it very well could break down from here. So if you didn't get into it and you are interested in getting into it, maybe just look a little bit lower. But if we get down below here, I think there's a better chance for price to continue to run down in this area. Great British Pound, Japanese yen. So the Great British Pound and the Japanese yen were both really good gap and go plays from our Sunday night live trade room. For those of you that were in it, you were able to catch that one. And then yesterday I said take a little bit off the table, or at the very least move your stop. And so in the overnight it popped back up and got this. So a little bit of lunch money on a trade like that for you. If you're able to kind of catch that one and hold on. And so I would look for the next breakdown, kind of below here, provided that we get some basing. Now, we may or may not get that basing, and if we don't, no big deal. We actually now have a gap fill level to lean on as well. Japanese yen, same exact thing. We talked about it yesterday. The gap and go was very effective, although it's continued its down move on that gap and go. Although we're gaining a little bit of momentum through here. we have a little bit of a triangle pattern. Now, usually these triangle patterns will break down. So keep an eye on that ascending triangle pattern with which typically those will break to the downside. So if we pop up here and come back down, that may make a nice little breakdown as well. So a fair amount of levels to look at for today. Remember that equities markets are coming into earnings again, and so it gets a little bit tougher sledding to find high quality equities trades that don't have earnings coming up. But if you've got questions on how to handle earnings, please let us know. Send us an email, support@tradersarmy.com. Till tomorrow, everybody, I hope you have a great trading day, and I will see you.